Hi, my grade 11 students. How are you? I think you all are well. I'm also well. Today, I'm going to start new lesson as promised in the previous video. Last video, we finished regarding financial statement of a sole trader. Financial statement of a sole trader. There, we discussed how to prepare profit and loss statement and how to prepare statement of financial position. You remember profit and loss statement, we record the income and expenses of the business. From that, we can find profit or loss. In the statement of financial position, we enter available assets, capital and liabilities of the business. Now you have basic knowledge how to draw profit and loss statement and statement of financial position, right? In this lesson, we are going to discuss about how to prepare financial statement. It means the same thing, what? Profit and loss statement and statement of financial position, including adjustments. Including adjustments. What do you mean by adjustment? You know, what do you mean by adjustments? Right, wait. I'll explain this everything, right? Then everyone pay attention here, right? All the activities what I do today in this video, you take a ZR book and you bring a ZR book and you take a pen and you do all the activities what I do in this video, right? Okay, now let's we move to the slide. Following points will be discussed in this chapter. Introduction of adjustment entries. Introduction of adjustment entries. Yeah, introduction. What do you mean by adjustments? Adjustment means this. Remember, adjust. If you want to adjust something, adjust. What's the meaning of adjust? Adjust means we change the place, no? That place is not good. It is not the correct place, right? We can move here and there. Then, this is the place. Then we adjusted. We change, right? Why we change? Now the current place is not good. Current place is not correct. Current value is not correct. Like that. So, adjustment means we change the values, change the place. Why we change the place? Because the now current situation is not good. Current situation is not correct. That's why we change to the correct place, correct value. Adjustment entries, right? Then remember, here we talk about some details regarding the business, why we adjust, why we change them to get most corrected answer. Most corrected answer. Simple example I'll tell here. You remember, you think about your house water bill. House water bill. Your monthly water bill is, you think, 5,000 rupees. How much? 5,000 rupees. It is the usage of water bill, right? Usage of water bill. Then monthly, for this month you want to pay 5,000 because, this month water bill is 5,000. You already used, you have used 5,000 worth of water during this month. But the problem is, when you go to settle, when you go to pay this bill, you had only 3,000. You put only 3,000 rupees to that bill. They will accept it. Tell me now, practically, how much you have paid by cash? How much? Tell, how much? 3,000. It's 3,000. Now, you tell, this month water bill expense is 3,000. You paid by cash 3,000. Paid by cash 3,000. Right? Actually, really, practically, water bill usage is 5,000. But you paid only how much? 3,000. Then tell me, when we calculate this month profit or loss in your business, in your family income and expense like that. So, remember, practically you paid 3,000, but your water bill usage is 5,000. You consider only 5,000. You had only 3,000 at that time. That's why you pay 3,000. If you had 5,000 rupees, you have to pay. You can pay 5,000. No, that's the thing. Then tell me, real water bill value is how much? 3,000 or 5,000? 5,000. Like this is only one example, right? In future, I'll explain this everything. Okay, keep in touch. Now, recording of adjustment entries. Then that is the adjustment that the previous time, that before I told you about adjustment. Then in this lesson you can learn, I'll teach you, then you can learn how to record these adjustments entries. How to record in adjustment entries in the business, right? You can consider about those things, right? Then these are the adjustment entries. What are they? These are the adjustment entries. What are they? This is first one is accrued expense. What is that? What is that? Accrued expense, right? Accrued expense. I'll explain what is this. Accrued expense. Accrued means payable. Accrued means payable. Payable means expense. Remember this? Yeah, water bill was how much? 5,000. But you paid only how much? 3,000. Then how much you want to pay more? How much you want to pay more? You paid 3,000 out of 5,000. But you have to pay more? 2,000. That is accrued expense. Accrued water bill. Okay. Then think about electricity bill. Your monthly electricity bill is 10,000. How much? 10,000. But you paid only 7,500. You paid only 7,500, but your bill is 10,000. How much you want to pay more? How much the payable electricity? How much the accrued electricity? In this case, 2,500. 2,500. Why I say that? Because you want to pay more. Right? Payable expense. Payable expense. It's accrued expense. Right? Okay. Now the other one, accrued income. The same word. This is accrued expense. It's a payable. Accrued income, payable income. Do you pay your income or you can receive? You can receive. Then this accrued word we can replace, we can use in front of the expense and in front of the income. Right? How? Then when you put accrued word in front of the expense, it is payable. If you put accrued in front of income, it is receivable. Payable, receivable. If it's an expense, payable. If it's an income, receivable. Okay. Then tell me, accrued income is receivable income or payable income? We don't pay income, we receive. Then receivable income. I'll give an example here. What is? Remember, annual, right? Annual. This is annual, not monthly. But we can use monthly also. Just now I take annual, right? Sometimes you may think every time I take monthly expense, right? But we can consider annual expense, annual income also, right? Remember, annual house rent income. You have rented out building to someone. Annually, they should pay 120,000 rupees for you for the whole year. 120,000 rupees. But they paid only 100,000. They paid only 100,000. They agreed to pay money later, the other 20,000. Remember, practically, how much you have received now? 100,000. Actually, you have to receive more. If your income, annual income is 120,000, but you received only 100,000, how much house rent income to be received? Accrued house rent income, 20,000. That is the meaning of, right? Now, bad debts. Bad debts. Good debts, bad debts, right? Bad debts means bad is not good, right? Why it's not good? Remember, bad debts means there are some debtors. Who are the debtors? You know the debtors. Debtors are the people, these are the customers. They should pay money for us. Why they should pay money in future? because we already sold our goods to them on credit basis. We have provided our service them on credit basis. They agreed to pay money later. But the problem is this. What's the problem? Problem is this. What? Some of them, not everybody, some of them are unable to do their payments due to fair reasons. Sometimes their business may be bankrupt. Continuously they earn losses. Then they can't pay their payment. Sometimes some people, death of the customer, like leave the country. So then can we recover that money? No. So we have to bear that loss. We have to bear that loss as a businessman. So that loss is called bad debts. Bad debts. It's a loss, right? Now, depreciation. Bad debts, okay, right? Then depreciation. Depreciation. Depreciation means depreciate. Depreciate. Decrease in the value. Just here I'll give only simple definition. Simply I explain, but deeply we can explain one by one later, right? Okay, depreciation means when we use something, especially you think about non-current assets, buildings, vehicles, computers, machineries, cameras, that's everything. When we use long time, the value decreases. The decrease in value of the non-current assets. Decrease in value of the non-current assets are called depreciation. Decrease in value. Why decreases? Because when we use, physically that value decreases. Think about difference between brand new vehicle and used vehicle. Right? Brand new vehicle is very expensive. Why? Still we didn't use, no? Right? After using, the value decreases. That difference is called simply depreciation. But remember, I'll give deeply, we will discuss them deeply in later, right? Okay. Now, how to present non-current assets in the statement of financial position, we discuss. How to do the financial statement with adjustments in the statement of financial position, we are going to discuss this both, right? This everything. Okay. Now, introduction of adjustments. Adjustment entries are the entries that should be adjusted in ledger accounts to get most corrected values to the financial statements. Remember, these adjustments are done in ledger accounts. Where we record transaction first? In the ledger accounts or prime entry books. Where? Prime entry books first, right? First we record them in the prime entry books. After that, ledger accounts. What we record in the prime entry books and ledger accounts? Generally day-to-day transactions. When you pay water bill 3,000, we record only the 3,000, not the 5,000, right? The previous time I told you, the monthly bill is 5,000. Even though your bill is 5,000, you paid how much? 3,000. Then cash account credit side, then water bill account debit side, you put 3,000 and 3,000. But we know, well, our bill is 5,000, but we paid only 3,000. So, in the cash account credit side, we put 3,000. Water bill debit side, we put 3,000. But you must remember this. Now the time is to do adjustments in ledger accounts. In the ledger accounts, you can see only 3,000. Cash account credit side, you can see 3,000. Credit, water bill account, you can see debit 3,000. But under the additional information, no, they will inform you how much the payable water bill, accrued water bill, right? Accrued water bill is 3,000. Why? If the water bill is 5,000 and you paid only 3,000, the accrued water bill how much? 2,000. No? We are going to adjust that 2,000. Then this is called adjustment. This is one of the adjustment. One of the adjustment. Right? Then adjustment. Adjustment entries are the entries that should be adjusted. That should be adjusted where? In ledger accounts to get most corrected values to the financial statements. You know this. Why we do this adjustment? Remember this. But in the previous videos, they have provided some details. They never provide us additional information. They have provided some details. So we enter those details to the profit and loss statement and we found the net profit, and we assets and capital and liabilities we put into the statement of financial position. We finish it. Actually, that time why we practice those questions? To understand what is profit and loss statement, what is the statement of financial position, to get some knowledge regarding that. If you don't have some knowledge regarding these two, so we can't do this lesson. Right now I know well, you all have some knowledge regarding the profit and loss statement and statement of financial position. That's why we are going to start this adjustment part. Then again I'll tell you, if you want to calculate net profit of the business for a specific time period, you have to consider annual income and annual expenses. Annual income and annual expenses. Annual income and annual expenses. What do you mean by annual income and annual expense? Annual income means whether you received or not. Whether you received or not by cash in the current accounting period, you must consider annual income. The full amount of income related to the current accounting period. For an example, then you remember, before I took an example, house rent. Yeah, house rent, annual house rent is 120,000. But how much they have paid before? How much they have already paid? Only 100,000. Now tell me, annual house rent income is 100,000 or 120,000? 100,000 or 120. Which one is the income related to the year? Related to the year, current year, yeah, annual house rent income is 120,000. But you received only how much? 100,000, other 20,000 they will pay later. Sometimes they will pay it in the next year, but it's okay. But you remember, this year house rent income is 120,000. 120,000. Remember, this everything we have to do in ledger accounts. Ledger accounts. Remember, now you can think like this. When we record transaction in the cash book is one of the prime entry book. We enter the details in the prime entry book. After that, we post them to the ledgers. In the petty cash book also same. First, we enter the details to the prime entry book. What is a petty cash book? After that, we post to the ledgers. Okay. Think about purchase journal. In the purchase journal also same. Purchase journal is a prime entry book. After that, we post them to the ledgers. Sales journal. Yeah, sales journal also same. Sales journal is one of the prime entry books. So first we record the details in the sales journal prime entry book. So we post them to the ledgers. The accounting, there's a procedure. There's some order to record transactions in the accounting in a business. What's the thing? You never record any transaction first in the ledger accounts. First you record where? In a prime entry book. In a prime entry book. After that, we post them to the ledgers. Here also, this everything, all the adjustments we can do in ledger accounts. But you must remember, before we do these necessary changes in ledger accounts, we must record them in a prime entry book. Then tell me, what is the prime entry book? It is general journal. Right? Now you try to understand this. Right? This is the thing you should remember. What is that? Adjustment entries should be recorded, right, in ledger accounts. But before we do these necessary adjustments in the ledger, we have to record the same details in the prime entry book. What is the prime entry book we use to do this adjustment entries? It is the general journal. General journal. I think now you understood well, right? Then this is the adjustment entries. Importance of preparing adjustment entries. We have to consider about this now. All the ledger accounts can be balanced and clause in balances can be brought forward. Yeah. Remember, after doing the adjustments, after do the necessary changes in the ledger accounts, finally we can balance off. You know, balance carried down, balance brought forward, balance carried down, balance brought forward, balance carried down, balance brought forward. Like continuously we balance off all the ledger accounts at the end of the accounting period, mostly at the end of the accounting period. Why? At the end of the accounting period, we want to prepare trial balance, right? We have to bring those details to the trial balance, right? So like that. Remember, after entering the additional information means I mean here about the adjustments, right? After doing necessary changes in the ledger accounts regarding the adjustments, we can balance off them. We can bring most corrected balance to the forward when you prepare financial statements. It is the first important thing, right? Then most corrected profit or loss can be calculated for a specific time period. Remember, I take same example. You think your house rent income is annual house rent income is 120,000. How much? 120,000. But you received only how much? Think about the previous example. 100,000. You received only 100,000. It means your house rent income is 100,000? No. Your house rent income is 120,000. But you received only 100,000. Why? They informed us they will pay that rest 20,000 in the next year. They will pay that 20,000 in the next year. It means next year your house rent income is 140,000, including the next year house rent income? No. Remember, even though they paid or not, if not, you received or not, your annual house rent income is 120,000. You never change that. When you draw the profit and loss statement as income, you write every time, every year, how much? 120,000. Sometimes they didn't pay even 1 cent in this year. They are giving different reasons, right? But annual house rent income is still how much? 120,000. You put there in your profit and loss statement. You know the place after the gross profit. We write discount received, commission income, interest income, right? Then house rent income also you put there how much? 120,000. Sometime they will pay by cash in the next year. It's okay, right? Then when you do the adjustments, you can calculate real profit, most corrected profit or loss of the business. So the other important thing is that financial position of the business can be measured accurately. Financial position. What do you mean by financial position? Financial position is available assets of the business, available liabilities, and the capital value for a specific date. That situation is called what? Financial position. If you forget adjustment entries and doing some necessary changes in ledger accounts. When you forget, can you get real value of the assets? Can you get real value of the liabilities? Can you get the real value of the capital? No. If you get an idea about the business to make proper decisions, you must do necessary adjustments. Then you can get a correct idea about the business, right? Okay. Now, that's why we say financial position of the business can be measured accurately. Most corrected accounting details about the business can be informed to the interested parties of the business. Who are the interested parties? Owners, managers, employees, government, right? Financial institutes, banks, like that. They are interested of your business details. Sometime future investors, they expect accurate information from you. Sometimes some people invested their money in your business, right? They expect good result, good news from you, right? Then you should give good news them. What's good news? Good news means you should give proper and accurate information to them. Then they can decide whether they invest more money, or if it is a bank, whether they can pass the bank loan requested by that business organization. So then to make most correct decisions, they request accurate information. If you give accurate information, they will get proper decision. They can get proper decision, right? Okay. Most corrected accounting details, yeah, that is the point. Then financial statements can be prepared according to the accepted accounting standards. Accepted accounting standards. Remember, in accounting we can see rules and regulations, right? Rules, standards. We have to follow these accounting principles, accounting policies when we maintain account, right? They will give some standards for us. They will provide some principles, accounting principles. In that, each principle says what? Follow, you consider about adjustments. Then you can get best information, proper information regarding the business, right? That is the thing. Now, you know well what are the importance of recording adjustments in a business, right? These are the points I'll revise again, right? All the ledger accounts can be balanced and closing balance can be brought forward. We can get most corrected balance after balancing of the accounts. You know, we balance off the accounts at the end of the accounting period, right? Then most corrected profit or loss can be calculated for a specific time period. Most corrected profit and loss, right? If you do adjustments in the ledger accounts, we can find most corrected values from each account. Then we use real, accurate, proper values to prepare profit and loss statement. Then you can see their real profit, correct profit, right? Financial position, the other one is, you know, after the profit and loss statement, we draw the financial position, no? Right? Then profit and loss statement, we use income and expenses, right? Not on income and expenses account, there are assets accounts, liability accounts, capital accounts. We have to do some changes in those accounts also, right? Then if you do adjustments in those accounts, it means from that account, we can get real values of the assets, real values of the liabilities, real values of the capital. Then you can get proper financial position, statement of financial position. If you use proper details, it means using the adjustments, right? Most corrected accounting details about the business can be informed to the interested parties. Yeah, you know, interested parties, owners, managers, right? Employees, investors, these are the people, right? Financial statements can be prepared according to the accepted accounting standards. I explained you, accepted accounting standard means we have to follow accounting principles, some rules when we draw the financial statements, right? Not only preparing financial statement, when we record the details in the prime entry books and ledger accounts also, we have to follow some rules, right? Then these are the importance of preparing, recording adjustment entries in the ledgers. Recording adjustment entries, right? Only following adjustments are discussed in a sole proprietorship according to your syllabus. Yeah, in your syllabus we consider about only about sole proprietorship business, right? In A level you can study how to prepare financial statements in partnership and companies also. But in your syllabus we focus only about sole proprietorship business, right? In this business, we consider these adjustment entries. Accrued expense. Briefly, I explained before, accrued is payable expense. Payable water bill, payable electricity bill, payable advertising, payable insurance, like. Accrued income. Receivable, right? Receivable house rent income, receivable interest income, receivable commission income, right? Receivable, right? Then bad debts, it's loss, right? Depreciation, these are the points we are going to be discussed, right? Then we can take one by one to discuss, right? Now, accrued expense. Expense which are related to the current accounting period. Expense which are related to the current accounting period, but still not paid by cash. But still not paid by cash. Remember, your electricity bill for the year is 10,000. Annual electricity bill 10,000, right? Annual usage of electricity 10,000. You paid only 7,500 by cash. You paid only 7,500 by cash. Now, the problem is you didn't settle the full amount of the bill. You settled only 7,500. You have to pay more 2,500 electricity bill. It says accrued electricity bill, payable electricity bill. It's a liability. It's a liability because you have to pay. You already used but still didn't pay. That's why we say here what? Expense which are related to the current accounting period. Yeah, that 2,500 is related to this accounting period or next accounting period. It is related to this year. Why? You use 10,000 worth of electricity. That's why they send the bill. Yeah, electricity bill is 10,000. But you paid only 7,500. Right? You create a liability. Then payable expense is, it may be a accrued water bill, accrued electricity bill, accrued advertising, accrued employee salary. Payable is all liabilities. But still not paid by cash. Yeah, that's why. Still not paid by cash. That's why we say liability. These are known as a payable expense. Yeah, payable expense. It's a current liability. It's a current liability. It's a current liability. Current liability. It's a current liability. Okay. Now, I'll give the double entry, journal entry. Relevant expense account debit. Accrued expense account credit. Relevant expense account debit. Relevant expense account debit. Accrued is payable. No? The payable portion is liability portion. Payable part is liability part. Liability. So that, liability accounts, it gets their balances in the credit side. No? That's why payable expense account, if not accrued expense account, it gets credit balance, credit side. Just expense account, expense debit, no? Expense and assets debit. So any type of assets, expenses, any types of expenses accounts it comes to the debit side. But payable, accrued, when we put accrued word in front of the expense, it becomes liability account, right? Now you say, what's the double entry? Relevant expense account, debit. Accrued expense account, credit. Relevant expense account, debit. Accrued expense account, credit. Everyone must remember this double entry. Now remember again, what is the prime entry book we use to record adjustments? Remember, we have to use prime entry book to record adjustment entries, right? It is general journal. It is general journal. After enter the details in the general journal, we can bring them to the ledger accounts. We can do necessary changes in the ledger accounts, right? Now you must remember this. I'm going to do an activity. I'm going to do an activity to understand, try to understand how to record these adjustment entries in the general journal and ledger accounts. General journal and ledger accounts. Okay. Now example. Accounting period of Tarindu's business starts on 1st of January 2020 and finishes on 31st December 2020. Following details are provided. Again you read the details. Accounting period of Tarindu's business starts on 1st of January 2020. Yeah, they start the accounting period on 1st of January. When we count 12 months, that day is the closing date of the accounting period, because generally we prepare financial statement for a 12 months time, right, to make correct decisions. Then it says and finishes 31st December 2020. Yeah, that 1st of January to 31st December, 12 months. Then okay, no? Following details are provided. This is the detail. Annual insurance expense 6,000 but paid only 4,000. Annual insurance expense. Annual insurance expense for the whole year. Total bill of insurance is 6,000. It said they paid or not? No, they didn't tell. Still they didn't tell. They tell what? Annual insurance expense 6,000. But paid only how much? 4,000. But paid only 4,000. Your bill is 6,000. Paid only 4,000. Tell me how much the accrued insurance expense. How much the accrued insurance expense in this case? 2,000. You have to pay how much? 2,000. They tell you here the first detail is just information. Annual insurance expense 6,000. Tell me, when you refer the cash account and ledger accounts, what are the values that you can see inside those accounts about insurance? Understood? I ask this, I tell this. This is only detail, annual insurance expense 6,000. You can't see this detail anywhere in the prime entry book or whatever, in wherever. Why? It is only just detail. But second point they say is what? They say, but paid only 4,000. They already paid 4,000. Remember this, when you pay any cash payment, where you record it? When you do any cash payment, you record in the cash account. No? It means in the cash account credit side, you can see how much? 4,000. Already done, because already paid. No? There's an account in the ledger as insurance. There also you can see how much? Only 4,000, because they paid only 4,000. It means your annual insurance expense is 4,000. No, they paid only 4,000. They give us, but annual bill is 6,000. Then you decide how to record this other 2,000 rupees. It's regarding what? It's regarding, it's only, this 2,000 is only accrued expense, accrued insurance. That's why I have given before. Then I go back to show you relevant expense account, debit, accrued expense account, credit, right? Then you remember this double entry. Then we have to record this adjustment entry in the general journal and ledger accounts. Then everyone take your, write in books, and you bring your rulers and you take your pens, right? And you do with me, this first activity, right? Now, annual insurance expense, you know this, right? I draw now what? General journal, you know. I told you what I told you. I told you we have to use general journal and ledger accounts to do adjustments, right? This is the general journal. Date. Then journal voucher. Then description, right? Then ledger page, debit and credit. Debit and credit. Debit column, credit column. I think everyone draw this format with me. On the top you write general journal, right? Date, yeah, journal voucher, right? JV, journal voucher. Description, ledger page, debit and credit. The small one, don't think about that, right? Now you remember this. How much you can see in the insurance account in this business now? 4,000. Why? They tell us annual insurance expense is 6,000. But paid only 4,000. In the cash account you can see 4,000. In the insurance account also, how much you can see? How much you can see? Debit side, 4,000. If you want, I can show you that account. Like this. Date, description, ledger page, value, right? Date, description, ledger page, value. I draw another account also. It's easy for us now. You also do the same way. You draw the other account also. Then it's better. It's easy for you when you practice the question. Then you can ask, why sir, we draw two accounts? Do you remember the double entry? Do you remember the double entry that I have given before? I think you remember. That's why we draw two accounts. Expense account debit, accrued expense account credit. Then, so here we draw two accounts. Date, description, ledger page. Yeah. Okay, good. Then we can name these all the columns. Date, description, ledger folio or page, right? Ledger folio, value, date, description, ledger folio, value. Now you name the other columns also in other account. How? You write date, description, ledger folio, value. If you want, you can put as cash, no issue. Date, description, ledger folio, value. Okay. How many accounts now? You know, there are two accounts now. Relevant expense account debit, accrued expense account credit. This is, what is the type of expense here? Here, insurance. Then, insurance expense account debit, accrued insurance expense account credit. If you want to see it again, see, I think you have written down them, right? Yeah, this is the double entry. Relevant expense account debit. Relevant expense account means yeah, insurance expense account. Accrued expense means accrued insurance expense. Right? Insurance expense debit, accrued insurance expense credit. Right? Now you go to the question. Then you can name the accounts. Then insurance account. Insurance account. Insurance expense account. Expense. Here, accrued insurance. Accrued insurance. Insurance expense, accrued insurance, right? Remember, the question said this. Annual insurance expense 6,000. Can you see this 6,000 in these accounts or in the cash book or anywhere? No. Why? They just give the detail what? 6,000 annual insurance expense. But they tell 4,000 they have paid. They have paid only 4,000. If they have paid only 4,000, cash account credit side we put, and the insurance account now already available balance is how much? Now available balance 4,000 because they have paid it, right? Then here in cash account credit, insurance account debit, how much? 4,000. You can see this 4,000. Right? Then if you want, you can write 12/31 or any date you can put, because but we do this adjustment in the 31st December. Right? Now, how much you want to pay more? If your insurance expense is for the year is 6,000 and you paid only 4,000, how much you want to pay? Only 2,000. No? Now we are going to record that 2,000 amount. It is the adjustment. Now we already given balance is 4,000. Now we are going to adjust this. We add more 2,000. We do this 12/31st, right? 12/31st. You know the method. What is the method? When we record details in the ledger accounts, we change the names of the accounts. We change the name of the accounts. In the insurance account, you never write as an insurance. In the cash account, you never mention as cash inside, right? You write the other name of the account, right? Then insurance account, we write accrued insurance. I use short word, is it okay? A means accrued, right? A means accrued, accrued insurance. Accrued insurance account. Yeah, insurance account debit 2000, accrued insurance account credit 2000. Accrued insurance account credit 2000, 12/31st. In the accrued insurance account, you mention insurance. How much? 2000. Now, this is the entry. This is the adjustment entry. This is the adjustment entry, right? This is the adjustment entry. Only the 2000, right? We adjust only this 2000. All that 4000 already they have recorded. When they pay that 4000, they recorded it. Cash account credit side, insurance account debit side 4000. Now we did what? Adjustment entry. Adjustment entry, it is the 2000, right? What's the double entry? Relevant expense account debit, because this is insurance, then insurance expense account debit. How much? Only the arrears amount, 2000. Relevant accrued expense. Accrued, what's expense? Insurance. Accrued insurance account credit 2000. Now we put, right? Remember, you have to record this detail in the general journal. Actually, practical situation is this. First, you record this entry in the general journal. After that, we post them to the ledgers. If I do that method, actually, it's difficult to understand you. When I write this double entry in the general journal first, it's difficult. You don't know how it comes directly, straight away. General journal, right? When I do this adjustment in the general journal, easy to understand. Then you write only the entry in the general journal. You must remember this. The practical procedure is, first you write the general journal, after that you post them to the ledgers. But here I use the other method. Why? Because it's easy to understand you, right? So now I enter these details in the general journal. You have to, general journal. Why I enter this detail to the general journal now? Second, because it's easy for you to understand, right? Now you put the date when we do this, 12/31st. Right? We do this one in 12/31st. 12/31st. Do you record about 4000 rupees where you can see in the insurance account here? No. Here we record only the adjustment entry. What is the adjustment entry? Only 2000 part, right? Now, you remember, you know the methods. When we record the details in the general journal, we use the debit entry first. We record the debit entry first. It's a rule. Right? Then insurance expense account debit. If not insurance account, it's okay. Insurance account. Insurance account. You mention as debit. How much? How much you put? 2000. Then accrued insurance. I put only A to mention accrued, right? Accrued insurance. Account, we never mention as debit, credit inwards, but we put the value here. Okay. This is the entry. You must remember, already recorded details in the ledgers are not recorded here. We record only here what? Adjustment entry. Then you know the method. After entering the details in the general journal, we should give a brief description. Brief description. That description is called narration. Then you write the narration within brackets. What's a narration? Recording of, if not recorded, accrued accrued what? Insurance of insurance of 2000. Finish. You mention in within brackets. You mention that in the brackets. Right? I think now understood well how to do the adjustment. We did only one thing. So when we move to, now we move to the next activity in the same under the same activity we go to the second transaction, right? Now, yeah, first one finish. Monthly rent for the building is 8,000 but paid only 10 months. Monthly rent for the building 8,000. Monthly rent. It is monthly rent. Yeah, monthly 8,000. Monthly 8,000. Right? Then, but paid only for 10 months. For 10 months. Then we calculate first, no? Then it's easy. Monthly how much? 8,000, right? Monthly 8,000. Monthly rent. Monthly rent 8,000. Okay. How many months they have paid? 10 months. Then 10 into 8,000. How much the value? 80,000. Okay. They have paid 80,000 as house rent. How many months? For 10 months. But to complete whole year, how many months more to be paid? Right? More 2 months to be paid. Right? 10 into 8,000, 80,000 already paid. So cash account credit side, house rent expense account debit side 80,000 and 80,000. But we have to pay more. 2 months payment. 2 into 8,000. How much? 16,000 is the accrued portion. I think you understood well. Monthly house rent expense 8,000. They paid only for 10 months. Then 10 into 8,000. How much? 80,000. This is the amount paid by cash. In the house rent expense account, you can see only this 80,000. In the cash account credit side, you can see only this 80,000 because this is the amount they have paid. But you remember they paid only for 10 months, not to complete whole year. We have to pay more 2 months period. Then 2 into 8,000, accrued amount how much? 16,000. 16,000. Then we are going to record only this 16,000 as adjustment, right? Now we draw general journal and how many accounts? 2 accounts, right? Then see, we can use this detail. Now no need to go to the question again because we have the details here, right? You draw general journal first. Date, journal voucher, description, ledger page, debit and credit. General journal, it's right. Now you draw ledger accounts, two ledger accounts. Date, description, ledger folio, value. Date, description, ledger folio, value. Then you can name the columns. What is the account? Rent expense account, right? First is rent expense account. If not rent account, rent expense account. What's the other one? Accrued rent expense account. Accrued rent expense account. Right? What are the columns? Date, description, ledger folio, cash or value, right? Cash or value, both are okay. Date, description, ledger folio, value. Date, description, ledger folio, value. Date, description, ledger folio, value. We have to name now the columns of the general journal, right? We forget to do it now. So we, on the top we write general journal. Then date, journal voucher, right? Journal voucher. Here description. Ledger page or ledger folio, right? Debit and credit. Right? Now, do you remember the method how to record them, right? But the normal practical procedure is we have to record them in the general journal first, right? After that, we move to the ledger accounts. But it's easy to understand you if you enter the details in the ledger accounts first, then we can write only the double entry in the general journal, right? In the O-level exam also, when they ask, you can follow the same method, right? Now, you know the how much the money already paid by you. How much the money you already paid by you. You can see it. Yeah, 10 into 8,000, 80,000 you already paid. Then cash account credit side you can see this 80,000. Then rent expense account debit side also you can see 80,000. Then rent account debit side you put this 80,000 rent expense account, right? Rent expense account debit side you put this 80,000. you can mention here as cash, right? Cash. If you want, you can put the same date 12/31st or right. 80,000 you can see because you already paid, you have done this payment, right? But the problem is this the full amount? No. The full amount is how much? 80,000 plus, there are 2 months, 2 into 8,000, 16,000. The total amount should be 96,000, right? Now we are going to record this accrued amount. Accrued for 2 months, 2 into 8,000, how much? 18,000. Then, not the 18,000, 16,000, 16,000. 16,000, relevant expense account, debit as mentioned, accrued rent. Accrued rent, 12/31st. If you want, you can write the date again. If not, only one time is enough, right? Rent expense account, debit as accrued rent. Accrued rent account, credit 16,000 as rent. 12/31st. Right? 12/31st. Can you see clearly what is the adjustment entry? Adjustment entry is this. I highlight now. See, this 16,000, right? This 16,000. This is the adjustment entry. This is the adjustment entry. Only this entry we record in the general journal, right? This entry. I circle now it, you can see. The circle area, right? Only this is the adjustment entry. Why? This is the available balance of the rent expense. When they pay this 80,000, they already recorded that thing in the ledger, that value in the ledger account. Then you bring only this adjustment entry in the general journal, right? What's a journal entry? Rent expense, debit, 80,000 or 16,000? 16,000. Accrued rent credit, 16,000. Right? Now, write it. 12/31st. Rent expense debit. Rent expense debit. Rent expense account debit. How much? 16,000. Accrued rent, a rent, right? Accrued rent. If not, you write it. Accrued rent. Accrued rent account. Credit how much? 16,000. We bring this value to the journal now, and you write narration. Recorded accrued rent of 16,000. Yeah, this finish now, right? Remember this. Every time what we record, what we enter in the general journal, only the adjustment detail, right? Adjustment detail, right? Now, I'll show you one more thing. Then actually these are everything attached with the, related with the financial statements, no? Right? Now, we can balance off these two accounts. Final balances you can bring to the financial statements. I'll show you one more, but here I highlighted, no? So, I don't use these two accounts. I use the previous account, right? Previous account, and I balance off them, and I'll point out you what are the values we bring to the financial statements, right? Now, I'm going to balance off the two accounts. Okay, I think you remember we have done balancing of in the grade 10, right? You know balance of ledger accounts. Yeah, the big people know now. So you can balance in off ledger accounts, right? Okay. Now, you know what are the methods? What is the methods? What are the steps of balancing of ledger accounts? Get the total of the both sides. Get the total of the both sides of the accounts, right? Write the highest value as the total of the both side. Write the highest value as total of the both side. Then find the difference in the less side. Find the difference in the less side. Every time that in front of the difference you write what? Balance carried down. Then same balance you bring opposite down, opposite side down, and you write there the same value, right? Balance brought forward, right? Follow? 6,000. Highest value, debit side only details. So this side is the highest value. Same value you bring opposite side because this side is 0. The difference how much? 6,000. Balance we carry down. Then the same balance you bring. Balance brought forward. Here you write 6,000. Here you can write 6,000. Okay. Now expense account debit side, the total insurance, no? Is it in? Yeah. Insurance expense 6,000. This is the amount you write in the profit and loss statement. This is the value you write in the profit and loss statement. That's why I taught you before, before I start this part, I taught you, yeah, telephone bill or electricity bill or water bill or something like that. So your bill is 10,000, but you paid only 7,500. You have to pay more, 2,500. Now tell me how much you write in the profit and loss statement. In this case, 10,000 or 7,500 or 2,500. You write 10,000. Why? 7,500 you paid, you have to pay more, 2,500. Total expense for the year is 10,000. That's why we write that. The same way, you paid only 4,000, you have to pay more 2,000. The total expense 6,000. This is the amount you write in the profit and loss statement, right? Profit and loss statement. Then accrued insurance. Accrued insurance. Accrued insurance is liability. You know where we write the liability? In the statement of financial position. In the statement of financial position. In the statement of financial position. Right? So, it comes under the current liability, but we have to balance it. 2,000. Balance carried down, balance brought forward, 2,000. I want to tell something here. Actually, here I balance off the accounts, right? 4,000, 2,000, 6,000, 6,000, balance carried down, balance brought forward, right? If you draw neutral balance, including all corrected details, you can follow this. If not, directly you can transfer all the income and expenses details. Directly you can transfer all income and expenses details to the profit and loss statement without bringing the balances to the forward. Right? How we do that? I'll use the another color here to explain that. You think there are two methods, right? One method is you can bring balance of and you can bring those balances to the new trial balance, and referring new trial balance you can enter the details to the financial statements. If not, directly when you get the difference 6,000, no, here you write profit and loss statement, no balance carried down, balance brought forward. Directly you can transfer income and expenses accounts to the profit and loss statement. This is the way. This is the last adjustment. This is the last adjustment. We can do that also. Now, what's the third one? The bank loan of 50,000 has been taken at 12% annual interest. There is 2 months arrears. Okay. When you obtain bank loan, normally you have to pay interest. That interest is an expense. You know, bank loan interest expense we have written under the financial expense category in this profit and loss statement. No? Yeah. Then in this case, they have taken 50,000 bank loan. The percentage is 12. Annually, you want to pay 12%. Right? Then we calculate first how much the total interest expense in this business for the year, right? Then I'll calculate here 50,000 into 12%. How much the annual amount? For the whole year, total interest is how much? 6,000. This is for how many months? For 12 months. But they have paid only 10 months amount. Right? This is the 12 months amount, but they paid only 10 months. They have to pay more 2 months interest. Then we can find how many. This is for how many months? For 12 months. Then how much the interest per month? 500. Per month 500. How many months arrears? 2 month arrears. It means 10 months they have done. Then how much? 5,000 they have paid. This is the bank loan interest paid by cash in the cash account, credited 5,000, bank loan interest expense debited 5,000. But there are more 2 months. Right? 2 months. It is arrears. Then 500 per 1 month. How many months? For 2 months. How much? 1,000 rupees. This is the accrued. This is the accrued. Then we can record them in the general journal and ledger accounts, right? Then we draw general journal and ledger accounts. General journal. Date, journal voucher, description, ledger folio, debit and credit. Right? The same time you can draw ledger accounts also. It's easy for you. Date, description, ledger folio, value. Date, description, ledger folio, value. Date, description, ledger folio, value. Okay, you can name now each columns, right? Date, description, ledger folio, value. Date, description, ledger folio, value. What is the account? This is accrued interest, accrued bank loan interest. Then this is date, description, ledger folio, value. Date, description, ledger folio, value. Here you write bank loan interest account, right? Okay. Now you have to name the columns of the general journal. General journal, date, journal voucher, description, ledger page or ledger folio, right? Page or debit and credit. Okay. Now the thing is this, how much they have paid? There are 2 months arrears, then 10 months already paid. 1 month portion 500 into 10%. How much? Not the 10%. 500 into 10, right? Not percent. 10. Then 5,000. Then 5,000 you can see in the which account? Interest expense account, bank loan interest account, right? You write it first. You write it first. Right? Then here you put the date, last date you can put, right? Cash account credit, no? Cash account credit. Bank loan interest debit, how much? 5,000. Okay. How much the amount you have to pay now? 2 months arrears, no? Then 500 into 2,000 rupees. It is the entry, right? This is the available balance, right? If you want, you can write as balance, right? If not cash. Then what's a double entry? Relevant expense account debit, accrued expense account credit. Relevant expense account debit, accrued expense account credit. Relevant expense is bank loan interest account 1,000. What you write here? Accrued a interest expense, accrued interest expense. When we do this one, 31st of December, right? The same value, not the 5,000, 1,000 we bring here like this. The date is 12/31st. Here we write interest expense, like if not bank loan interest expense, same thing, right? You write this 1,000 and this 1,000 in the general journal. It is the adjustment entry, right? Then we write in the general journal when 12/31st, 12/31st. How you say that? Bank loan, B loan interest. Bank loan interest account debit or credit? Debit. How much? Are you going to write 5,000? No. How much? Only 1,000, right? 1,000 rupees. And accrued loan interest. This is L, right? Loan interest. credit 1000. Right? Narration, how we say? Recorded, accrued, loan, interest of 1000. Yeah, this is the way. Now, in this two account also, I'll explain you how to and how much we record in the profit and loss statement and in the statement of financial position, right? Remember this, I highlight now using red color what are the values and how much the values you record in the profit and loss statement and statement of financial position. Remember, you can balance off this, right? You know the method, right? You know the method. Then when you balance off this, how much? This 5,000 and 6,000. This is a total amount, how much? 6,000. Where you write? Profit and loss statement. Profit and loss statement. Under the administration expense. This is the liability. This 1,000, accrued liability. Where you write? Under the current liability in the statement of financial position, right? This is the method. You do this same activity 2-3 times, changing the values. You practice yourself, then you can understand the theory well, right? Today, I taught you what I mean by adjustment, introduction of adjustment, importance of adjustments, and first portion, first part we finish. What is that? It is accrued expense, right? How to record accrued expense in the ledger accounts, in the general journal, and what are the places and what are the values we bring from these accounts to the financial statements. It means profit and loss statement and statement of financial position. This is the part I taught this chapter, this video. In the next video, we are talking about accrued income and other parts of the adjustments, right? Then be safe, stay at home. Bye.